Welcome to TradeTheNBI.com. This is John. This report is for the 6th of September, and we had the breakdown readings here with the NBI white leading, magenta under yellow, so we didn't expect that supports would hold. There was a brief moment where the market was making a little bit of an attempt, and then the selling just continued. And now markets are betting on, 50 basis point cut by the Fed, which I think is a bit unrealistic given what their Fed has been talking about, which would lead to further disappointment. Sort of baked in. We're getting closer on the election. Things are getting a little more spicy. We got debate coming up. Trump potentially going to prison at any moment. It's starting to heat up. So this is creating a bit of turmoil for the market because uncertainty is not their friend. They like when everybody knows what's happening, and that way they can make easy moves and there's no surprises. From an NQ standpoint, it's been the weakest, of course, and we're below that key algo level. And again, this makes it easy, below the 38%, obviously, for NASDAQ. Continued short, moved back up above the 18,956 algo level is more of a long from a broader standpoint. But that shakeout continues to be pretty darn negative. It's not improving, and we're still below the red line on the extremes, which indicates that selling still the priority at this particular stage. So the only things that are really doing well at this particular stage, bonds, and again, putting yourself further behind the curve. Of course, they're expecting, rates to move towards zero at this given stage. So they're way ahead of things and far behind where inflation is still running. Though the good news on inflation is everything asset class wise is failing, including in this case oil. So this is a benefit, particularly prior to the election, which is something they needed. They probably needed to start it a little earlier for it to have a dramatic impact, but it'll start showing up slightly in oil, gasoline prices going forward, but probably week or two delay. So as long as it can stay there or even continue to move lower. But the bigger issue with that is what we see coming out of China not having the demand that it was, and that's a bit of a concern. Of course, that's a bonus for the euro in the expectation that the dollar is going to continue to decline and they don't have to buy as many dollars from euros because oil is cheaper. Big help. And we also saw the shift that the Eurozone is back to buying more oil and gas from Russia than it does from the West. So all that sanction stuff flipped around and we're back to where things were before. And of course, people are still getting blown up and dying, but that's a whole different issue. The big winner, gold, continues to be the champion in this whole scenario. Crypto, not as much, continuing to struggle. Either from the supply issues for Bitcoin and or ETH still being unresolved with its approvals in that. So it's just ranging right here between the previous algo resets at 57, 53, and the further one at 48 that still needs to get filled, and the potential of that one in some kind of continued easing from a market standpoint. Here you look at ETH, really approaching at zero. Again, NBI white leading. You had the spike from before, which is why we broke below the 23%. And that's just been straight dumping. It's an interesting scenario where everything is under strain at this particular stage. And, you get periods like that. It's just relative. For 50K, pretty straightforward from a paint bar standpoint. In the brief attempted move right here going above the 23, but it came on the heels of NBI white spike, so you knew that we were going to be revisiting the lows. They tried to fight it back up again, but you can see this NBI white leading the whole way through. You're going down lower, and it's exactly what happened. It's a matter of waiting for it to finally fulfill its designed mission, and that makes it fairly easy, not a whole lot to think about. So here we had intraday. So the lead up was nice, big, bright move to the upside. Market opens up and everybody just starts liquidating into that elevated rise, and that drove it all the way back down. We had a couple of pops back up to the 50%, but nothing really sustainable. And then in post market here, they just filled back to the lows. Nothing shocking. And then we got more recently in just this last hour or so, some pretty significant selling taking place going into that, and that's putting it down, well, almost 40 here on the ES at this particular stage prior to the open. And, everyone's still, again, looking at, non-farm payrolls and all these other things to gauge how weak things have gotten. But as we've talked about before, been in a recession since the beginning part of the year, and by the time the market recognizes it, you're usually getting closer to the end of it than the beginning of it. So bear that one in mind, unless it's a really deep recession. Some people overplay their hand when they finally realize that there's a recession, and they think that that's the time to sell when it's actually time to begin to acquire. So we'll continue to follow it, obviously, and see what the readings are, because some of the base core numbers that we follow and the different commodities and that really tell the story prior to what you end up getting from data, which is always lagging. It's always the problem with it. It's why the algorithms have to be forward-looking rather than backward-looking, because the numbers you're getting from there are months old. So it's always interesting to me that people rely on them so much. They're just indicative of where we've seen trends already developing. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.